Good morning, Manoj. How are you?
I'm good, Mukund. How are you? Good morning to you as well. And good
You've
morning,
got a
everyone else too.
beautiful, you've got a beautiful world map as your background.
Yeah, so let's follow the world. Let the entire world be our guide to whatever we want to do in the next year.
What is all the blue in the map? It seems like some parts of it there is US lakes. In China, there's no lake over there. What is that blue
I
there?
have no clue. I have no clue. I've never actually, tried to figure it out.
There are some areas that are blue. I can see in the
Yeah,
US there is a little bit of lakes I can see, but not in China. The China has no lakes in that area. India
huh,
doesn't have a lake in that area. Cambodia
definitely.
doesn't have a lake in where it is being seen. Oh well. But very early Merry Christmas to you and to everybody who's
Merry
also on
Christmas,
this
everyone.
call.
Yep.
I think this has been a terrific year overall.
Absolutely.
I just find it amazing.
Completely surprised many of us.
Yeah, it is absolutely, the market has absolutely surprised all of us, I would say, to a large extent, right? I don't think
Yep.
any of us expected as good of a market as we have. So just to give you guys a little bit of more context, I'm going to go through what I would say. You can see my screen, right, Manoj?
Yes, I can.
Okay, so I do an index check really quick just to give you guys a little bit of context. This is the show of all of the key indices, and let's do performance year to date, just to give a little bit more context to this. So the worst performing index for the year actually was the energy index at negative 2.85%. But look at this, semiconductor is up 70% for the year.
Absolutely mind-boggling.
NASDAQ is up 53% for the year, and we still have 4 days left.
Yeah,
The SPY is up 23%. Small caps, even though we've said small caps have underperformed for most of the year, is still up 15% for the year, and the Dow is up 12% for the year.
and despite the fact that in the last few weeks, it's a Dow which has actually led from the front for the in terms of the rally, and
That's
here it is
exactly right.
underperforming the rest of the key indexes.
That's exactly right. And if you look at it from, just making sure that we check the other ones, Professor, the technology sector has obviously been the leader with nearly 55%, right? 54% growth for the year. XLK, which is tech, which we expected. Communications also expected. Meta, Google are all part of the communication sector. The number two up 51%. And then you look at consumer discretionary. This is because of higher prices
Hmm,
that
true.
consumers have been given from a lot of the large companies, right? Their stock price has reflected the fact that they're able to charge more. The only ones that have not done so well, if you look at it overall, is financial sector. Well, interest rates, that's to be expected. TAN, which is the solar sector, has underperformed as well. TLT, we keep talking about treasury bond
Yeah,
yields. That is that, and utilities. Utilities was to be expected. Energy sector was to be expected. So overall, this was a phenomenal year. And just giving a little bit of context on one other thing that I wanted to be able to share, right? In the last 50 years, there has never been more than 1 year when we've had, hold on a second, there's never been 2 years in a row that we've had more than 40% year over year gains.
wow. And that's
Never
NASDAQ,
been. Say that again, Manoj. You were going to say something?
and that's NASDAQ, right?
Yeah, NASDAQ has never had 2 years of 40% increases.
And this year we are going to do that.
So we'll do okay next year, I think, but don't expect a 40% increase. But still, one thing that gives me pause is there are so many people sitting on the sidelines with cash.
So even if for example there is a correction, there will be those corrections will quickly get bought into.
You'll get mild, maybe a downturn for the first half of the year, I think. The second half is going to be solid given the elections.
I was reading some data just yesterday. Every year, every January, you get at least $5 billion worth of uh, portfolio managers who have their pension funds to be deploying money into. 5 billion of at least 10 or 12 such fund houses ready with their cash ready to deploy cash every year in the January itself. So next
So,
month, before you think that markets should give us a correction, there is money lying already on the table.
yeah,
So
that's the interesting part. Number one, there's enough money and cash. Just to give context, there's there's 7.8 trillion sitting in money market accounts. Trillion.
wow,
So these are people that have kept the money thinking in the middle part of the year that
yeah,
interest rates being as high as they were, they would rather move into cash. So they moved a lot of money into cash.
yeah,
And so that will come up at some point of time when the correction. So any correction dip that comes in the first half of the year, which I'm expecting, right? For the first half of the year, we kind of meander through up and down market. But second
yeah.
half of the year,
January has
we
mostly
expect.
been like that, we normally see very volatile markets because after seeing the center rally of December and the first few days of January, markets normally do tend to, give up some of those gains which have been gained in the center rally.
Yeah, absolutely. And then the other thing I wanted to point out as well is the S&P historic um, PE ratios, which I think everybody
Yeah, let's
wants
talk
that I
about
can.
that as well. That matters, but I don't know if anyone is actually even thinking about valuations at this point, given that
Um,
liquidity rally we are in.
to give context, let me share that, right? Actually, it's okay if I don't share it. Even if you look at the SaaS valuations, software as a service valuations, historic valuations, median valuations for SaaS companies had been in the 9 to 14 range, and now they are in the 17 range. Um,
So not cheap from any perspective.
Correct. They've never been, and of course, I can understand some people saying, well, SaaS companies, most of them are not profitable. But of the 98 SaaS companies that I track, only 17 are unprofitable compared to last year, there were 47.
That makes it more interesting.
So companies are getting more profitable, and the EPS guidance up for some companies has gone up by 100 to 500%.
So maybe that explains why market wants to rally.
That explains the higher multiples, right? There are
Yeah,
only
absolutely.
two reasons companies will do better. Their EPS increases or their multiple increases. That's it.
Absolutely. Absolutely. So even multiples have increased because the EPS guidance has increased.
Guidance has increased. EPS guidance has increased. But yeah, so I'm excited for next year, but I think you got to be a little bit cautious in the first half, at least first quarter to first half of the year. When I say cautious, it's very, very optimistic still, but it's not like I'm going to be sitting in cash 100%. But I want to be cautious as well because you're going to see, this is the seventh week of consistent up and up. This is
Eight,
the eighth week
eight
because
weeks.
last week I was not here. I keep thinking we're still 7 weeks. No, 8 weeks of consistent weekly gains on
Yes.
the NASDAQ and SP. But anyway, let's go to our review of the key
So
charts.
today, I instead of giving some analysis, I would rather be asking questions, and those questions we as traders and investors must. Are you able to hear me, Mukund?
Yeah, I can hear you.
Yeah. So these questions we as investors and traders must always ask and answer ourselves. So even if we don't get answers, we should pause and think whether we want to be in or be out. 8 consecutive weeks of gains. Where exactly are we? We are at all-time highs. What are the MACD and RSI showing negative divergences? All-time highs, 8 consecutive weeks of gains, vertical gains, and RSI and MACD are negatively divergent. Do you want to buy here or do you want to just wait before some sanity kicks in? And this is a weekly chart. Let me move from weekly to monthly.
Manoj, what I've done is I've made both of our images small because you're showing full screen
Okay,
on the chart. So if
okay,
we put our chart above that, then it becomes much harder for people to see the top end of the screen.
I understand. So if you look at this chart, now this is a monthly chart. Consecutive for the last what 7 years. See, this is where exactly we hit RSI as definitely one of the highest 2018. Ever since, markets have been making new highs. This is a monthly chart, by the way. But RSI has definitely not made a new high. It has consistently been on the lower side. if we even keep aside the 2018, we just start from here when we actually hit the peak in 2021, 2022. Since then as well, RSI, MACD have not followed what market has been doing. So again, the question is, this is a monthly time frame. Monthly time frame, weekly time frame, they give us far more clarity as against the daily and 4-hour charts. So what do you want to do here? Do you want to buy here, or do you want to pause before jumping in, and before markets give some kind of a sanity in terms of taking a break, taking a pause, and then rallying again? I have really no answer whether market wants to rally past from here, or whether it wants to take a correction. But given that 8 consecutive weeks of gains, I am actually staying out for at least couple of weeks. Let the first couple of weeks of January come in. Let them start. Let them show us whether there is some correction, some kind of pause in the market before I say, hey, I'm in now. I'm wanting to buy now.
And we are
This
at
is
an
the daily
all-time
candle.
high. We are at an all-time high for the S&P 500, right?
Yes. So there is another question now. S&P 500 futures all-time high. What about SPX spot prices? They are not at all-time high.
Got it.
Which means we have to ask, do we wait for those 30, 50, 40 points which are still to be made as an all-time high on the spot prices, or do we just move out?
It's about 50
This
points
is,
away, right? It's about
I'm
50
sorry,
points away. Is it
I'm sorry, I
50,
didn't get
40
your question.
points, something like that?
I'm sorry, I just couldn't, I missed your question.
How many points are we away from all-time highs? The
30
all-time high
points,
is
30 points, I
48.80.
think. So it was, so what was the high, I think yesterday or day before, it was 4778, and 4818 is what the last time high was. So 40 points more. And now that's SPX. Leave SPX aside. Look at NASDAQ Composite. Far behind. We are at what, 15,069, and the high was 16,212. So about 1,200 points more. Can we keep on rallying on NASDAQ and S&P and Dow Jones? And can we forget about the small caps? They are like 20% away from all-time highs. These are the questions as an investor, I would definitely ask. And not to forget that there will be many more supply zones coming in right here. Can we clear the supply zones and then just start rallying? There has been 5 weeks of consecutive gains, 6 weeks of consecutive gains on Russell 2000 small caps as well. Can we keep rallying on from here? Will there be not a pause? Will there be not a correction, or maybe, I don't know, whether crash? I would not talk about crash because market does what it does the best. It follows liquidity. It follows what is there in the future. Markets discount the future. They don't look at the present. They don't look at the past. Whether it is GDP, whether it is earnings, that's a past looking statement. What market does, it follows the future, it discounts the future. So what holds in the future, we don't know. So what we are doing right now is we are discounting the rate cuts, and the economy that would be after the rate cuts is something that we are still not aware, because we all were thinking of probably hard landing and soft landing. Those hard landings are out of the question now. Markets are up, economy is in good shape, and here we are. Markets are consistently rallying. So I'm definitely not buying here. I'm waiting for my price to come back to sanities, come back to some kind of a correction. Whether it is 2%, 5%, 10%, depends upon what kind of comfort level that I get, but definitely not the buying zone for me.
Yeah, let me ask you a question, Manoj. Now, just to make sure that I'll tell you what my position is. I'm not saying go short. The market is still trending upward.
Right,
So I would not advise anybody to go short at this point at all. Even if you take a
right,
small correction here and there, the
right,
market is still an upward trending market. So don't
right.
take short positions just because you feel like it is going to go down. What you really want
So
to be comfortable with is doing exactly what the market says. Right now it's trending up, you go trending up. It will
so
at some
in
point in time, it might at some point in time change. And when that change happens and it confirms the other trend, then you take the short position. Right now,
so
you just want to be cautious. You don't want to be negative.
absolutely. So the reason I showed all these monthly and weekly charts and asked these questions is because not to make people or not to suggest that we should be going short. But so here is the learning that we normally keep talking about, and every week we will be giving some learning and some education to our viewers. Secondary indicators, RSI, MACD, stochastics, parabolics are all those in secondary indicators. They are not the indicators to make a trade. They are the indicators that should support the main thesis for what exactly your view of the market is. So my primary view of the market is what my candlesticks are saying, what my trend lines are saying, what my moving averages are saying. Based on that, if my secondary indicators, RSI and MACD are supporting it, I would definitely follow. At the same time, if RSI, MACD on a higher time frames like weekly and monthly are giving you some kind of a divergence, then your primary trend comes to a question mark. Which means if the primary trend is upwards and RSI and MACD are giving you negative divergences, you definitely do not want to continuously be long, because there will be sudden spot and market will give you a correction. Whether that correction will be a healthy correction or whether it's a long-term correction, that's something market will decide. So you do not go short just because RSI and MACD have given you negative divergences. You just move out of your longs, wait for the market to decide what it wants to do. You follow your volume profile, you follow your moving averages, you follow your trend lines, and then you take a call whether you want to go ahead and go short or not. Even if you go short, you follow other candles. For example, on this weekly candlestick, what did Dow Jones form? Dow Jones form an evening star. Evening star on the all-time highs definitely gives me as a trader a sign that I could definitely going as a short. But that short does not mean that markets are going to go away and then fall 10% from there. Definitely not, because this is not the market where it wants to go down 10%. It may give you 1, 2, 5% kind of aggression. That's it. Because markets are following and giving you something that 6 months are going to be something like that, which we haven't seen in the market, in the economy. So definitely not a shorters market, but definitely traders market wherein they can make money and then move out. You are on mute, Mukund.
Sorry, I was just going to say I agree with you on that point. The other interesting point, I think, is you want to be very, very clear on what are the trending segments or trending themes for the year.
Right.
And I think that is an important point, because in a trending market for specific themes, you will find that they don't give you any room at all. That's what I've found consistently, right? And if the market is very, very trending in a specific theme or a specific area or a specific category, I've always found that the market will not give you a chance too much to be able to get back in. So
Right.
just keep that in mind. I was going to show Manoj a couple of more things. Just let me bring that up again. Okay, can you guys see my screen? Can you see my screen, Manoj?
Yes.
All right. Let me just bring through two things that I think. Let me move this down here so you can see us both. If you need to change, we will change it. That's not a problem. No, this is too big. All right. We can just see you.
Yeah.
There are two important sectors, three important sectors actually. The first one, I've not drawn it out. I was going to do it out next week. For next year, that I'm very, very, very positive about. I was going to say bullish, but the word is not bullish, but it's very positive. Cybersecurity, semiconductor, and also AI themes. I'll tell you a little bit about each of them for about 2 minutes. First is cybersecurity. I don't think it is going to go down next year at all. This year was a phenomenal year for most cybersecurity stocks, except for maybe a couple, Fortinet and a few others. The reason is because the number of cybersecurity attacks are not going down, they're actually going up. And second, because of the rule the SEC had put in place that within a month of any company having a breach, they are supposed to report it.
Right.
Now more companies are reporting it. For example, 2 days ago, you would have heard about Comcast, which has Xfinity. They said, hey, we got a breach of 36 million consumers. 36
That's big.
million consumers,
That's
right?
big.
So cybersecurity is one. I'm not going to talk about cybersecurity today only because I've not finished my thesis on it, but this is a very good visual. It's on the semiconductor value chain, right? There are companies that help with design, Cadence, Synopsys. There are companies that do intellectual property, which is fabless IP. Of course, there are a lot of companies that fit into many of these boxes. So this is not a perfect image. In fact, you could say NVIDIA also could fit into design VP, design intellectual property, if you will. But the fabless design is the next part, which is Broadcom. So it starts over here, starts with design. Then these people such as Qualcomm, Apple, NVIDIA, Broadcom, Marvell, etc. Xilinx is a part of AMD, by the way. They all design chips. And then they go to the foundries where equipment from these companies such as ASML and Applied Materials is used. So these guys, Global Foundries, TSM, UMC, Samsung, are very big customers of these equipment providers that provide a lot of the equipment. These companies have not been doing very well this year. The companies that have done well are primarily in the semiconductor. SMH overall has done well, but mostly because of NVIDIA, Broadcom, and Apple, right? The big seven, Magnificent Seven plus, some of these guys have done phenomenally well, and they've moved it up as well. AMD revenue year over year has gone down actually, and next year they
Mm-hmm.
expect it to be flat to go down a little bit. And then along at the bottom, you have the integrated manufacturers, but they're mostly on the guys that do everything end to end. SK Hynix, for example, is more of a memory manufacturer. Intel obviously does the whole thing, soup to nuts, except for equipment. Samsung does as well. Micron is a memory manufacturer. So a lot of these companies you will see that are starting to do well will not be necessarily only in the fabless design space. These three have done excellently well, or these four. But these on the foundry side and the equipment side, they're just starting to turn around. So look for that would be my suggestion. And then the second one is the AI. You take some of the AI value chain, starts with the semiconductor at the bottom. Obviously, NVIDIA has been the big winner. AMD is coming out with a chip, but these guys will start to do well next year as well, I think. Goes up above storage, database, and also data analytics, if you will, Snowflake, Elastic. They've done okay this year. Arista has done very, very well on the networking side. And then the actual hardware, whether it's cooling towers or racks, it is Supermicro. Word cloud providers, all of the big ones in this chart have done well. Token has not. DOC and DigitalOcean is not. The SaaS side, HubSpot has done well. Salesforce, most of these guys have done well. Salesforce still has a little bit of room to go up. And then you have the infrastructure, the AI-enabled products, if you will. So this is a chart that I put together to remind myself throughout the year. There may be one or two companies missing from this chart overall. I'm pretty sure this is not a comprehensive chart. People could come back and say, for example, hey, you have Qualcomm. How come you don't have now ServiceNow, if you will? You could put some of these guys up here. I'm sure that they would do a good job.
Interesting graphical representation, actually.
So those are the important things to keep in mind while people are trying to figure out what to invest in. If you will not go badly if you invest in trending themes or good themes, number one, and you will not go badly if you also invest in a cap weight that requires or has a little bit more small cap than mega cap. Mega cap has done very, very well this year. That doesn't mean they'll do badly next year. They might continue to do well. It just means that if you had to do, a lot of people do a 40-30-30 split, 40% mega cap, 40% large cap, 30% large cap, 30% small cap.
Right.
It wouldn't be bad to flip that around to 30-30-40, right? Or
Yeah.
30-30-25-45, something like that, right? Actually, 30-30-40 would actually be a nice thing for most people. Keep 30% money in the mega cap stocks. The good stocks for next year, I think, are Amazon will do very, very well. They're a little bit, they've been a little late to the party, and so I think will Meta. Among the large cap stocks, there are a lot, but I
Meta has
like
already
the
done well. So you still think that it has room for more room?
it'll go down and then go up. It'll go down a little bit, give you a chance to enter in the 100-day moving average. That's another video I did about a week ago, Manoj, on my personal video.
Right.
Very simple heuristic for a lot of long-term investors. If you are looking to buy a stock for the 1 year time frame or 2 years time frame, patience is a key for every investor, but patience
Absolutely.
is more key, and they have the time for long-term investors. Wait for the stock to come to the 100-day, 200-day moving average. Give yourself a little bit of room. And then when you buy it in that time frame, you're not going to go too wrong with the mega stocks at the 200-day moving average. In fact, I showed
Absolutely.
a chart that said that 85% of the time at the 200-day moving average is a good place to buy, with the room only to go down another 6%. So let's say you buy the 200-day moving average, $100 stock. I'm making an example. Let's say it's Apple and you bought it at $100, and the 200-day moving average, you only go down, your only chance is you're going to go down about 6% or so. That has been the history of the stock.
Right.
So that was my quick theme-based investing with cap weight will help you a lot for next year. You don't have to pick the perfect stocks, but if you weight yourself in terms of cap weight a little bit more towards small cap and you invest in a little bit of the themes, over index on the themes, I suspect 2024 will be a good year for you.
Awesome. All right.
This was terrific. Thank you so much, Manoj.
Thank you, Mukul.
Sorry I was not there last week.
And that's okay. It's okay. I mean, as long as we can continue making those videos, whether it's you or me or maybe together, investors should get something out of it.
Absolutely. Have a great Christmas, everybody. Have a new year. We will not see you next week. We will see you on the first week of January.
Absolutely.
Thank you,
Thank
guys.
you,
Bye.
everyone. And please like, comment, and subscribe to our videos. We do love, we do comment, and do reply to your comments. Thank you.
Thank you very much.
Bye-bye.